the way I look at it is, I think ultimately every individual, every company, every organization, every government, their goal should be to accumulate as much Bitcoin as possible. I think from the 1031 side, companies should be trying to accumulate as much Bitcoin as possible. They should also be measuring their opportunity cost in Bitcoin, whether they like it or not. I think that is the productive way of viewing this transition into a Bitcoin future. And so Bitcoin denominated cash flow, we like to call it sats flow, this idea of generating a constant stream of Bitcoin to your balance sheet. And this is where there's a big difference between private companies and public companies. And we do, we have a balance there, right? We helped Fold go public. Will is now leading Fold in the public markets. But the advantage that public market.
Sorry for jumping in here too much, but I think it's important to just kind of talk through this stuff. But anyways, so he said something there, the opportunity cost of Bitcoin. And I think that this is something that we need to be talking about more within Bitcoin, because I had this, it was a haircut I think I had a couple weeks ago. And my hairdresser, we were talking about Bitcoin a little bit. I always talk to her about Bitcoin. She's interested, but she just doesn't have the excess funds to put a bunch into Bitcoin. But I still like talking about it to her. Anyways, I said that since I started my channel, so this is the opportunity cost of Bitcoin. I'm going to walk you through it in a real life example. The opportunity cost of Bitcoin is that when I started my channel back in November of 2023, the price of Bitcoin was around $35,000 US. Today, Bitcoin is worth over $100,000 US, which means that if you were holding during that year and a half, if you were holding your time and energy in fiat, in dollars, Canadian dollars, you lost approximately 67% of your purchasing power. 67%. So that is the opportunity cost. Even though it doesn't necessarily pull through it with inflation costs, that is the opportunity cost of holding dollars instead of Bitcoin. And I think it's very important to understand that when you're trying to explain this to people, because I think that really paints a picture of the opportunity cost within Bitcoin. That's at an individual level. But you also have to think about this as a business level, right? Because businesses typically put their profits into cash. Why? Because they need it in case something were to happen. If there's an unexpected event, if there's a sudden downturn in their revenue, their ability to service their clients, that's why they keep cash, because it's liquid. But when they're holding that, there's a huge opportunity cost to be holding that in dollars. And that's why I think that Bitcoin is powerful in so many ways, but especially in the sense of it's liquid, which means that if you would have held Bitcoin there, you wouldn't have lost purchasing power. And the nice thing about Bitcoin that most people haven't come to realize yet is that it is extremely liquid, right? So think about a business who has profits, they have some reserve assets. They don't want to put it in something that would be difficult for them to sell in a hurry, something that isn't very liquid, right? So if a company had, let's say, $100,000 worth of cash sitting on their balance sheet, they typically keep it there. That's one thing I've noticed in my years as a CPA is that companies hold a lot of cash for that reason, in case something happens and they need to use it. It's kind of like their emergency fund. So it doesn't really make sense to hold it in something like real estate where you can't sell half a building to cover a couple months of payroll. And there's a lot of transactional costs in that between the lawyers, the realtors, the transfer taxes. So that's why companies choose to hold their reserves in cash for the most part until they get to a certain threshold. That's where they can start putting some into like a longer term asset, like stocks, bonds, real estate. But for most small companies, they don't have that ability to do that because they don't have enough of a reserve. But if these companies and businesses decide to hold their reserve in Bitcoin, not only will it not lose purchasing power, like 67% in a year and a half, but they can part with that at any moment. Bitcoin has global liquidity, which means if they needed to sell it to cover their payroll for 2 weeks, they could. So that's why, again, in addition to all the things that Bitcoin does and is going to do for the world, businesses holding it on their balance sheet instead of cash just makes so much more sense. So that's the opportunity cost of holding dollars instead of Bitcoin.